Hello, welcome to this carrier update brought to you by Powerfleet. I'm here with the Sultan of Sonar, Zach Strickland. Zach, what are we starting off with?
So we've got our outbound tender rejection index falling once again to 18. This is like another new low that we found in our outbound tender rejection index, 18.18% today. It's not the new low of all time. It's the new low since about July or August of 2020. When we were seeing those tender rejection rates rise so strongly, as the pandemic was really taking a hold there, and that consumer demand really driving volumes. Now, the interesting aspect of this, volumes not really changing. So we're seeing more freight moving under those contracted agreements as those rates have increased significantly. So there is some easing pressure in the market overall. We're seeing it on the reefer side for sure, as those tender rejections have come down dramatically over the last month or so. But the flatbed rejections are up, and the van starting to come down a little bit. So the van side, of course, represents about 70% of this overall index. But I do think it's interesting that we are seeing, I wouldn't say as strong of a demand as we had in the third, fourth quarter last year, but it is not really moving. Like, we're not really seeing a big sequential decline like we would normally see when tender rejection rates are starting to crawl down a little bit. So for now, the market should kind of have this slow crawl downward until whatever disruptive event, or maybe there's going to be some spring seasonal demand or whatever, because we still have all this inventory that needs to be replenished. We still have a strong consumer, regardless of inflation, even though their confidence is waning, Anthony. But at this point in time, it looks like things are just going to get incrementally better for a period of time until whatever, we're just kind of waiting to see if there's something else that disrupts and pushes us back higher, because that's what tends to happen. We have these, the holiday season, and then we had Omicron in January. What's next is really what we're waiting on to push this thing back before, for now it looks like capacity is kind of growing incrementally.
Yeah, and I think when we were looking at, say, if we had a time machine going back into like December, one of the things we were expecting for the upcoming year was a slower growth trend. I think this is kind of right in line with it. It's like it's continuing to grow. Just as you said, I think it's a wise forecast just until the next thing happens. We don't know what it is, but it's bound to be something. But until then, there's still so much demand, so much flowing through the country until that next point.
Yeah, the sense of urgency is really going to be the thing to watch. I mean, we've talked about this for months now. I mean, what happens in January or in December, in November, December, that's that sense of urgency that really drives a lot of that freight volume to have to run. That's what pushes those spot rates higher. Is not necessarily yes, increasing demand is part of it, but in December, demand drops. Every single year. We saw it drop this year, yet tender rejections go up, because freight has to move. And freight right now, I don't know that we have the same level of urgency that we had last year and even into the later part of 2020. Let's look at our next chart and break it down in those modes that I was talking about, just to see the van rejection rate down here in green, 17.79%, still just really slowly declining right now. Flatbed still up above 40%, and that's the Anthony index there, the faux try. This one's going to be definitely the sector to watch, I think, probably for the next several months, because we have that spring seasonal rush of flatbed freight that tends to happen. And of course, all those sectors right now are humming. Oil, gas, which are the same thing essentially, construction and the industrial manufacturing side of things. All those things are still just have all this pent up energy in it. So the flatbed sector, this is probably going to be the year for flatbed after being kind of the stepchild for a large part of the pandemic, as that industrial sector's kind of lagged in its recovery because of all the supply chain bottlenecks. Reefer, any reefer carriers out there know that the market for reefer is easing as dramatically as it has since the start of this pandemic. This is one of the biggest declines in tender rejection rates for the reefer sector, I think, since way back there coming into the summer. But still, you're talking about a decline from 40 to 35%, whereas this is more like a 40 to 30% drop. So, you're looking at a lot of the declines kind of in those markets. Los Angeles, Ontario, you're seeing those tender rejection rates really fall out there. Rest of the United States is kind of uneven, hit or miss, but we're just not seeing the same amount of tightness in the reefer market that we saw earlier in the year, and that we're heading into that time where the produce harvests start to run. So there's going to be a little bit of a buffer here, more than likely, before we see that. I mean, spot rates are coming down on the reefer market as well.
Yeah, this was just the time to kind of catch up, but there was no catch up being had. It was still a mad rush, and now we're going into another busy season. Zach, thank you so much for this update. We'll check in with you again. Now we're going to go over to Kaylee Nix and Michael Vincent.